Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. So something amazing happened in the last week or so, and that was the government shutdown that was so widely talked about in the press actually ended up doing something that no one, at least no one I know of, expected. And that is the government shutdown was averted and the tax provisions or the continuing resolution or whatever you'd like to call it actually did something to the current year tax system for 2017. So I thought I'd talk a little bit about this because really you haven't heard a lot about this in the press. And if you've already filed your tax return or you're in the midst of filing your tax return, many of these things will directly impact you. So it's important that you pay attention to these things if you've already filed and see if any of these things affect you. I'm going to break these into a couple of sections. The first one is extended tax relief for individuals and families. So what are we talking about here? The first one they talked about is if you've experienced a foreclosure, and this is something that was supposed to end in 2016, you can now again exclude that debt for a short sale or loan modification up to $2 million on your 2017 taxes. So what I'm talking about here is if you are unfortunate enough to have lost your home because of a foreclosure and the bank sent you a 1099-C for cancellation of debt, prior to this tax extension, that would have been income to you. But what they've done here is they've extended that for 2017 and allowed you to not include up to $2 million of that on your 2017 taxes. The next thing is mortgage insurance premiums. Now, this is something that had gone away at the end of 2016 as well. So now you're able to deduct again the premiums that you pay for mortgage insurance. And I really think this is one that's going to affect a lot of people who may have already filed, because if you are, over 80% of the loan to value of your home, you're probably paying this mortgage insurance, and you wouldn't have been able to take it prior to this tax revision. And frankly, a lot of the software that most of us use don't even have this updated yet as well. So you're going to want to talk to your tax advisor or talk to your accountant, or if you've done your return yourself, you're going to be looking at filing an amended return to take advantage of this. The next thing is the tuition and fees deductions. And what we're talking about here, again, this ended in 2016, was college students or parents can deduct college expenses, including tuition, books, and other supplies up to $4,000, even if the student only took one class. The deduction is capped at $4,000 for individuals with adjusted gross income, or AGI, of $65,000 or $130,000 for joint filers, and $2,000 for individuals with AGI up to $80,000 or $160,000 for joint filers. So this is one they brought back again. Now this is the next one that I think is going to affect some people, and I've actually had a few people come in to see me that I've got to contact now and say, hey, there's been a change, and that is the credit for non-business energy property. What are we talking about here? This is where a homeowner made energy efficient improvements to their home, such as energy saving roofs, windows, skylights, and doors. You'll still be able to claim a credit of 10% of the amount paid for these qualified energy efficient improvements and 100% of amounts paid for qualified energy property, including high efficiency water heaters, air conditioning units, and furnaces for a taxpayer's principal residence. So this is something that had gone away. So if you've got any energy improvements that you made and you were told that you couldn't take a deduction for those, or if you did your own tax return and found that you weren't able to do that, you might want to look at doing an amended return for that as well. The last one under the personal things is a credit for a new qualified fuel cell motor vehicles. What we're talking about here is if you purchased a vehicle that runs on oxygen and hydrogen. I don't know too many people that have these, but it's something to bring up, which creates electricity known as a fuel cell vehicle. You may receive a credit up to $4,000 if your vehicle weighs 8,500 pounds or less. If you have a heavy vehicle, your credit may be more depending on the vehicle's weight. So that's some of the things that affected the individual. So again, we're going to go through the mortgage debt exclusion, mortgage insurance premium. So if you weren't able to take those, you now can do that and file an amended return. The tuition and fees deduction, credit for energy properties such as windows, doors, roofs and things like skylights. And then, of course, the extension of the credit for residential energy property. And what we're talking about extends and phases down the temporary components of the residential energy property credit for fuel cells, distributed wind property, and geothermal heat pumps. So this, again, pushed this forward into 2017. Now, there was also some tax extenders or relief for victims of disasters, one of which was for the California wildfire tax benefits, and the other was for tax benefits from victims of hurricanes Harvey, Irma, and Maria. And what that did was that the provision makes changes to the Disaster Tax Relief and Airport and Airway Extension Act of 2017, including extending the tax relief provided for covered disaster areas to Hurricane Harvey, Irma, and Maria that were declared between September 21st and October 17th. Now, there's a few business measures. I don't want to lose everybody on here. One of them is an extension of Indian employment tax credits, the extension of accelerated depreciation for business property on an Indian reservation, extension of empowerment zone tax incentives, and extension of classification of certain resources as 3-year property. Now, I have to tell you, I find these kind of funny. And it's just interesting to me that, we have this, debate over spending, and, obviously these must have been some givebacks to some of the people who they were trying to get to vote for this. We've got, Indian employment tax credits and acceleration of property on Indian reservations. But the one that really cracks me up is, now we've got this 3-year classification for certain racehorses. So you talk about something that is very, unusual and something that, doesn't, not something you think of every day. But, the thing that worries me about these are, a lot of people haven't talked a great deal about these. And this happened, over a week or so ago. And these are things that really can affect, the average person filing a tax return. Like I said, this mortgage insurance premiums, I bet in the returns that I do, maybe 40 or 50% of the people I see have these insurance premiums. And what's interesting about this is for the last several years, they've been deductible. So if someone was going to, do their own tax return this year or, do it online or something like that, you're probably looking for the place to put that. Now, it'll be interesting to see how long it takes for the IRS to get these regulations out and for the software developers to add these modifications. I know I just checked mine today and it still hadn't been made. Just like these energy credits. I've had a few clients already in this year, and they were sort of disappointed when they found that wasn't extended. So now it is extended. So now we've got to get in touch with them. And if you've done your own return or you've had somebody do your return, you need to get in touch with them as well and make sure that they are aware. And even some of my colleagues in the accounting field aren't even aware of some of these things. So, there's an opportunity to go back and take advantage of this. So, make sure you get in touch with your accountant if you've use somebody to do your tax. If you've done it yourself, take a look at these provisions and look at doing an amended tax return. And quite frankly, an amended tax return is not all that complicated. So you can go online and look at the IRS 1040X is the form you'd be filing. You can look at the instructions, or of course you can call an accountant or call someone that you're familiar with to do these tax preparation. I'm not personally sure whether any of the online software will allow you to do amended returns, but I thought this information would be useful to share with everybody, and I appreciate you listening. And if I can be of any service to you, please let me know. Thanks a lot.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.